Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting Asian session live market analysis now, and I'll explain the expected market moves for this particular week from 15th to 19th of July. We are on 15th, on Monday, the start of the week. And I'll take about 30 minutes to explain the expected market moves and also the market reading technique we can use in order to earn nicely from that other market. So first of all, I will explain to you the derived forecast. The forecast is derived statistically using the sequential statistical analysis that is otherwise known as algorithm. And based on that, in the 4 majors and 2 commodity pairs, what could be the possible moves in this particular week? Basically, session-wise moves are explained in the next slide. Okay. This is the 3rd week of the month, 15th to 19th. So the trending move is expected to continue. It is upward trending move. Before that, they are making some downward moves in order to discourage the traders taking long or inducing the traders taking sell positions. Thereby, they'll be able to trap the traders and gain more levels and induce them to do the short covering. So in the market, you always come across the swings. So we should be able to find out why they are making the swings. The swings are mainly either an upward move up to that of the initial high or a downward move up to that of the initial low. But we have to find out whether it is a false move or a genuine downward move or a genuine upward move. And there comes our skill set. And I'll explain to you how the market reading can help us in order to determine what sort of swings they are doing it. So from 15th to 19th of July, we could come across in 3 different sessions, the Japanese, European and US sessions, the following moves. So you need to know the timings of each sessions. 0030 to 7 GMT is the Japanese session. 7:30 to 13 GMT is the European session. And 13:30 to 20:30 is the US session. In between the sessions, between Japanese and European, there is a 30 minutes gap, which is referred as a gap time. And similarly, from between European and US sessions, there is a 30 minutes gap. Between 13 and 13:30 GMT, that is also known as a gap time for 30 minutes. But between US session and the next day Japanese session, nearly you come across 4 hours gap. And during such gaps, they make the gap opening or gap a quick downward or an upward move. They try to make it when many of the banks are closed. So that is why you come across such big moves are happening on different occasions using some attributes. So we have to know the session timings, which is very important, in which session we are trying to trade and what sort of move we could expect. And I strongly advise the traders to do the session-wise trades. Suppose you enter during the early part of the session, that is 1 hour and 30 minutes from the start of the session, try to close it before 7 GMT. During the late Japanese session, from 5:30 to 7 GMT. So that way, if we try to do it, it will be nice swing trade. And we need not wait for a long time. Then afterwards, they make the gap time moves. It will be a false move. Then followed by that, the session-wise moves will be happening. And if they are near that of the low, then you try to buy when they don't breach the low for more than 30 minutes. And if they are near the high, and try to take a sell position if they are not breached the high in 30 minutes of your observation. Then try to close it within the session. And this way, if you try to do it, you need not watch all the 24 hours activity of the market. Instead, any 2 sessions you can watch. Still, you will be able to do the session start time, the entry, and session close time, exit. That way, if you try to do as a swing trades within the session or session-wise trades, then you will find that they always maintain the trend within the session and they don't bring in the trend reversals within the session. They bring in the trend reversal between sessions. So that we need to understand. Then it is easy for us to hold the positions without any fear. So first of all, to eliminate the market fear, we need to memorize the session timings followed by that of the players. And we can follow different timings depending upon our convenience or depending upon our location. But ultimately, it is a 24 hours market. So we need to understand how the market can be tracked using the GMT time frame. Some people used to call it as 1:30 GMT here and 8:30 GMT, etc. But actually GMT is a 24 hours clock. And because it is a 24 hours clock, it is appropriate to use 13, 14, 15 and things like that rather than 1:30 GMT, 2 GMT, etc. Because there is no morning and afternoon as far as the GMT time is concerned to make it as a 12 hours clock, and it becomes meaningless. So you have to understand that the GMT time has to be used in 24 hours format. Because these are all the observations I make. That is why I thought that I can just give the remark. It might be used conventionally, but it is scientifically wrong. Then what sort of moves we could see today? Swing and firm up moves could be seen during the Japanese session. And if you see that they are just formed the low 1.3054 in the case of euro, and they just breached the high. 1.3076 was the initial high, and they breached it by 3 pips. So swing and firm up moves are expected during that of the Japanese session. So that is what they are doing it. Then again they are expected to swing near that of the high and make the slide during the late Japanese session. So this is actually the weak beginning false move. So they will try to slide as if the market is going to drop, and many people are giving the expectations or attributes that Euro and GBP could make the slide, and this particular time frame. But actually they are expected to make a false slide during the late European session, and afterwards swing and firm up moves are expected during the US session. So today it will be more of a subdued moves and not a big moves could be seen. Why? Weak beginning, why they are making the false move? Because they want the traders to commit positions. So weak beginning false move means if they make a slide, so create a bearish feel among the traders, that means the rest of the days they intend to make the rise. If they gain the levels quickly on Monday, then they are expected to make the opposite of it on Tuesday and Wednesday. So the weak beginning false move, if it is a downward move on Monday, then Tuesday to Thursday, you will come across the gains slowly, and the visible gains could be seen on Friday. So that we need to understand. That is why I call it as a weak beginning false move. And also they do this particular weak beginning false move in order to induce the traders to commit wrongly in the market, the positions. So unless the traders commit positions, there is no point in gaining or losing the levels in the market, because the players do the circular trades and maintain the levels, and if they gain the levels, they should have a purpose. It is not simply gaining the level, somebody is going to give the reward for them. The reward is nothing but the profit earned from that of the losing trades of the traders. So not only the small traders, even the big institutional traders lose money because they tend to go with that of the trend and also tend to go with that of the market sentiment. So they create the market sentiments and act against that of the traders. So in that every week start, they make the week beginning false move in order to create a sentiment. Then tomorrow, 16th July, swing and rise moves are expected during the Japanese session itself. Then a small dip from that of the rise level and again continue to rise. And US session they are expected to make only swing and firm up move. So that means they are going to slowly gain the levels as an intentional move. Then on Wednesday, during start of the day, they could make a dip and then rise and slowly swing and rise during that of the European session. And US session, they are expected to make the swing and slide moves. So discourage the long holders to liquidate the long positions. And then on 18th Thursday, they are expected to make a small dip during start of the day and make a quick rise. Then again swing and slide, that is quickly gain the levels, and from the high they will try to make a small slide, and in order to induce the long holders to liquidate the long positions before making a swing and quick rise moves. So people might think that on Monday, Tuesday and Wednesday, the US session making subdued moves, thinking that it is not ideal to trade during the US session. Instead, we should do the trades during the European session or a Japanese session. This is how they confuse the traders. But if you calmly wait and wait for the good opportunity, every session will have that opportunity. There is no need to keep awake during late hours and try to trade. And that is not our intention, because basically we want to earn money to enhance our lifestyle and also improve our earning capabilities, or you make use of our skill set. But sometimes what happens, it traps us, and then we become addicted to trading and compromise all our lifestyle. So that should not happen. So you have to keep in mind that we have to trade at ease. And that can be done provided you have a full understanding of the market. If you don't understand anything, then anything comes out particular event or the market, it will look like a surprise. So when the surprise comes in, immediately it triggers our emotions. Then we become emotional trader. However, we try to control our emotions. As long as we view any event as a surprise, then it is bound to influence our emotions. So the best way to get rid of it is expect the unexpected. So if you think that euro could rise, then also think that there is a possibility euro can also drop. So in the event if it drops, what I am going to do? In the event if it rises, what I am going to do? If you think ahead of it, then subsequently you find that if they drop, you have already a solution for it. If they rise, you have already a solution for it. So that the mind will be able to easily recollect. Instead, you anticipate with a bullish feel that euro has to rise. Suddenly if it drops, you become stunned. Then the mind is not in a position to give a solution to you because of the influence of emotional situations. And they are all nothing but the endocrine secretions which influence the thinking ability of the brain or the working of the brain. As a result, we find that we become stunned and become furious and try to get angry with the market. And what is the use of getting angry with the market? Market is not going to react to your anger. So market will have its own moves, and we have to understand that it is not having any mercy to anybody. So that we have to keep it in mind, and if at all anybody can save your equity, it can be yourself, because nobody else can come to your shoes and try to save you during trading. That people have to understand. Then on 18th, dip and quick rise, swing and slide, swing and quick rise are expected. Then Friday, last day of the week, swing and rise moves are expected during that of the Japanese session. Swing and slide is expected during that of the European session. And then swing and rise is expected during US session. Then following the fourth week of the month of July, 22nd to 26th of the month, the trending move is expected. At that time, you will come across more visible trending moves. And you know that last week, beginning, they made such a bearish feel in the market. Euro was around 1.28 and it came down to 1.2750. I was explaining to you how exactly they are creating the confusions. And also GBP, they dropped down to 1.500 and even 4999 they showed. And then subsequently, they made the massive rise simply using some excuse. FOMC, they just used it as a trigger. And people think that because of FOMC, the market has to become bullish. Then on Friday and Thursday, they just made a quick rise, and from there they dropped it and brought it to the middle level. So this is how they try to create the market sentiment and act against the traders. And on Thursday, when I was explaining in the webinar, when euro was around 1.32 and 31 level, I was telling that you have to watch how exactly they are handling the market. All quick moves are false moves in the market, and they are trying to, it is not advisable to buy after the rise or sell after the drop. So now you would have seen what would have happened if you would have become emotional, or if you have become biased to that of any bullish or a bearish feel, then we are bound to get trapped. So these are all the expected market moves in this particular week. So every session you try to follow this, and when they are making a swing, whether you just find out whether it is an upward swing or a downward swing. If it is a downward swing, take a buy. And if it is an upward swing, then wait for the dip before making the rise during late session. Then you try to buy in the middle session, then you will be able to close it with profit during that of the late session. And if you find that a day in which you come across a strong rise, so you can buy during the dip and exit during that of the European session. So that way you can, this will help you to find out the entry and the exit timings. So that is what I intend to give it here. This is pertaining to that of the numerator currencies, mainly Euro and GBP. Then, because of the popular demand, so I started giving the expected range in this particular market. And this week, what could be the range in the case of all the four majors and two commodity pairs? Now, euro, they showed the low as 1.3054, and they could go up to that of 1.3000 once the traders try to commit more buy positions and they fail to exit out of that, then probably they may make a quick downward stop and then start rising. And this week high could be 1.3350 area. And already they showed 1.3076 as the initial high, and they breached the high. 1.3079 has become the high. And start of the, still it is only mid-session, and they are holding around 1.307376, around that of the initial high. So this is the range expected, and this is the level shown so far. As they increase the downward move or the upward move, I will try to modify this, but this will be the forecast level. Then GBP 1.5050 is the expected low, and 1.5099 they have just shown, and 1.5450 is the high, and 1.5130 they have just shown, and they are not breached the initial high. And in the case of yen, 99 could be the low. Already they have shown 99.08, probably a brief downward stop, and they could do it. And 102.50 could be the high. And so far they have shown only 99.38, and the new high is 99.39. They just went up by 1 pip. So you can understand their intentions, how they are doing it. And USD CHF 94.25 could be the low. Already they have shown 94.54. And the high could be 97.50, and 94.73 is the high they have shown. In the case of Canadian dollar, 1.0375 could be the low, and they are just shown 1.0380 as the new low, and 1.3081 was the initial low, and they just breached it by 1 pip. And 1.0400 could be the high. 1.0600 could be the high. So far they have shown 1.0400 as a high. In the case of Australian dollar, and you know that last week it was the currency on Friday which made the massive drop from that of 93 area, and 0.9050 could be again the low, and they are doing the consolidation 90.50 to 93 level in order to accumulate the buy positions, and then subsequently they are expected to make a massive rise from this week. And 0.9056 is the low they have shown so far. Then they could take it up to 0.9375 area. Currently the high was 0.9111, that was the initial high, and they formed the new high 0.9118. So in the case of Canadian dollar, they just breached the low by 1 pip, whereas in the case of Australian dollar, they breached the high by about 7 pips. So you can understand how they are doing it. And let us now look into that of the live market quote page and also compare it with that of the initial lows and the highs. In the case of euro, they formed the low 1.3054, the high was 1.3076, but they breached it by 3 pips to 1.3079, and they are holding it below that. So they are still, it is in the mid session. So during the late session, we'll come across that they are going above this particular high. Then GBP 1.5099 is the high, 5130 is the, that is a low, and this is the high, 5130 is the high, and they're expected to breach it again. And if you look into that of the net changes, euro formed the net change of 6 pips currently, and GBP has formed 13 pips, whereas Australian dollar has shown about 62 pips positive net change. You know that the commodity pairs lead the rally and lag behind. In this, you do not come across a corresponding drop in the case of USD CAD. So less drop and more rise moves are expected in the case of Canadian dollar, and Australian dollar is expected to gain initially, and later on it is expected to lag behind when euro and GBP are making visible gains. So now you can find that they always follow this typical pattern of gaining the levels in the case of the commodity pairs to start with. Then followed by that, it spreads to that of euro and GBP. Then the commodity pairs lag behind, and then you find euro and GBP take over that moves. So you have to find the sequence of moves they are doing it, and thereby you will be able to choose the right currency during different sequence. Simply if you think that, okay, euro is the best currency to trade every time, if you try to take a position, it may not show any profit or loss. Whereas if you choose the right currency which has made momentum and then try to enter into that, you will be able to really make good fortune out of that. Then in the case of yen, 99.08 is the low, 99.39 is the high. They are not breached the low or the high. Then Canadian dollar, 0.9454 is the low, 0.9473 is the high. They are not breached anything. Then Canadian dollar, 1.0381 was the initial low, and they breached it by 1 pip, and the high is intact. And Australian dollar, 0.9056 is the low, and 0.9111 is the high, but they have formed the new high, 91.18. So it is making 62 pips positive net change. And if you see in now currently the majors, all are showing positive net change. So they are into contrarian moves. So they are trying to make the contrarian move, gaining the levels in the case of numerator majors and the denominator majors. But in the case of commodity pairs, they are making the USD weakening move. Canadian dollar is showing negative net change, and Australian dollar is showing positive net change. So this is the close of the mid session up to 5:30 GMT. They are handling the crosses. Later on, you will come across they again continue to handle the majors. So here, when you see that USD CHF and USD Euro USD gain with a positive net change, that means Euro CHF, they are trying to gain the level. And less gain in the case of Euro and more gain in the case of GBP, they are trying to drop Euro GBP nominally. So that way you can easily find out. Euro and Yen, both positive net change, so Euro Yen is on the upside. Then GBP Yen is on the upside. They are making the upward move. So this is how you can easily find out which currency they are handling it at a given time. Then try to bet on those currencies. Then you will be able to quickly book profit. So in the market reading, what we note down is around 3:30 GMT, note down the initial lows and the highs and see the four majors and two commodity pairs and try to see that what set of moves and types of moves and in sequence how they are making it. We try to track it and try to understand and also use the GMT time frame to find out which part of the session we are and then try to enter and exit out of the market. Then entry, if the currency pair is near the low or the high and not breached them for 30 minutes from the start of the session, we buy near low or sell near high and close by late session as swing trade. So if they breach the low or the high and all other hedging strategies I'll explain to you during Tracking the Forex Market Together webinar, twin webinars, monthly twin webinars. I'll be giving it on 17th, 9 and 14 GMT. At the time I'll explain to you in the event if they breach the high, initial high or low. And also if you use the hedge, how to handle. All those explanations I'll try to give it on Wednesday 17th when I take up the part 1 and part 2 of Tracking the Forex Market Together. So if you are interested in understanding my trading strategy, you can register for the same and attend and ask your doubts. I am willing to answer to your questions. If the going is good and the position makes 25 pips profit, keep stop at entry and remove the hedging order. Thereby you are reducing the risk to nil. Then exit in the late session or the end of the day. If the going is good and they are not hit your stop at entry or trailing stop in a profit making position, then you can keep 45 or 75 pips limit order as the exit order, take profit order. And then if they are coming closer to that and not hitting the trailing stop which is 15 pips away from the market, you can move the limit order above slightly every time. About 25 to 30 pips you can move up, and also the trailing stop you can manually move it upward as they rise the market, and then you will be able to see that you are able to get the maximum profit out of that particular situation, because you know that the market is known to bring in sudden change in market sentiments and reactions. So you don't take any chance if they reverse the market suddenly. Your trailing stop will protect your profit. And if the going is good, your limit will give, you can maximize the limit or move away from the market and get the maximum profit out of that particular trade. So that either way you are prepared. If you are prepared either way in the market, then no surprise will come. So your mind will start accepting the trade and always look for a fresh trade. Ultimately, we are here to make money and earn good money out of our trades. So in the process, if you lose only, we become frustrated because the hard-earned money is lost. And also you need to understand the brokers. They are only capable of earning money from their own clients. So what they do is they try to give the local stop-ins to your accounts, and if it is hedge, and they try to hedge you locally, and then try to find out how exactly you are handling it. So in that process, what you have to do is, if it is a local stop-in, if the level is not shown, either you can report to them or simply close and keep another hedge order when it is making a loss of 1 or 2 pips. Rather than spending all your time in fighting with them and the hedge might be making a big loss, then you may not be able to handle it. And always keep in mind, besides that of the players in the market, the brokers also try to trade against us. In the market maker trading platform or in any other trading platform, either the broker or the bank is trading against us. So when they are trading against us with a full money power, we need to be smart enough to earn from the market. There is no point in blaming the system or the blaming how exactly the market is being structured. Because all the markets are structured in such a way, and there are market facilitators appointed by that of the nodal agency. But these market facilitators try to take undue advantage and become players in the market or operators in the market. So that is unavoidable worldwide. In the financial market, when the money has to become money, if you just keep 100 euro in a book and expect the euro to give birth to some more euro, it is not going to happen. But if you invest it in the market and it will earn some more euros, how it is possible? Because you have to be cunning and you have to be smart. So the players tend to act cunningly on certain occasions and smart on certain other occasions and try to make their own money in order to sustain their top slots. So I explained here the sessions, early, mid and late sessions, and 1.5 hours from the start of the session, 1.5 hours from the towards close of the session or the early and the late sessions, and between session is called mid session, and then 30 minutes gap time. Besides, early and the late stages, late sessions or trade can be used for trading in majors and commodity pairs. Mid sessions can be used to trade in crosses because the players are handling the crosses of the majors and the commodity pairs. And this is a very important thing. Only 2 pairs will be handled at a time. So with the help of the live market code page, you can find out which 2 pairs they are trying to handle it. Then you try to focus on it. Then early and the late sessions are ideal for taking and closing the positions in the majors. Then follow the time of the move. That is which session it is. Then net change in the live market code page. And the market spread. That is the spread between the low and the high. See here the spread between low and high is only about 25 pips. So here is hardly about 31 pips. So if the spread becomes more than 40 pips, only then you try to enter into the market. So these are all the informations I like to give. If you have got any questions, you can ask me. I'll answer to those questions. Otherwise, I'll show the last slide. On Thursday and Friday, what could be the possible moves we could see in the market and also the levels. Then I will explain on 17th July, part 1 by 9 GMT and part 2 by 14 GMT, tracking the Forex market together webinar. Exclusively, it will be market reading and trading strategy explained. So I can be contacted using the email ID dr@iknowindices.com, and I also post it in iknowindices.com/blog and fxtrade.net, my blog and the market comments. You can follow it, and if you've got any questions, you can ask any time of the day. So thank you one and all. Wish you happy trading and see you on Wednesday. Thank you.